Jay from Sei.
ETHCC has been great. I've been to, this is my third conference this year, and the energy here is better than anywhere else that I've been to. My first job straight out of college was at Robinhood. Most notably, I was there when the GameStop saga happened. That kind of highlighted how the traditional financial system is using a bunch of these legacy rails that don't make sense in the era of the internet. So that was the initial inspiration for Sei. When we initially got started, like fundraising, for example, that was right after Terra blew up. So this was May of 2022, and we decided like, oh, let's go out and raise money, which in hindsight was a pretty bad idea.
I actually worked at Sei, so I was at Sei in 2022. I actually remember one of the first things that I had to do was go through all the podcasts that you had done to see which parts we can clip out and post on social media.
Yeah, full circle now.
Yeah, really.
One thing that is generating most of the money in crypto, and that is trading. Tokenized assets, tokenized funds coming from Brevan Howard, Hamilton Lane, BlackRock, Apollo, Laser, and Ondo USDY as well. Worst case, it becomes kind of a marketing narrative for them. That like, oh, we are becoming crypto native, we're following whatever the latest financial trends are. In the best case, it's a way for them to make billions, if not trillions of dollars in the future.
And I know you guys have also alluded to doing some work on the agentic AI side. So what is that about and how's it going for you?
Yeah, so Sei definitely wants to be at the forefront of everything happening with agentic commerce.
How has being the founder changed your life?
It's a very deep question. Most exciting was the mainnet launch. So this was August of 2023, and the entire labs team basically just got together in south of San Francisco. We rented out an Airbnb, and then we were just getting ready with all of the logistics that go into helping launch a chain. And basically everything that could go wrong did go wrong as part of that. But then after it was done, like we were just all kind of celebrating over there.
Super excited today to have Jay from Sei on the podcast. Jay, how's ECC treating you?
ETHCC has been great. I've been to, this is my third conference this year, and the energy here is it's better than anywhere else that I've been to. Because I was in Consensus Hong Kong, where I would say it was like a good amount of energy. ETH Denver was pretty dead compared to here, but Cannes is beautiful, and I feel like everyone's just been happier because of that as well.
Yeah, no, for sure. But you're at DAS as well recently.
I was at DAS. We had our team offsite at the same time, so I only went to some of the side events. But yeah, I think Cannes is still a nicer vibe in New York City.
Yeah, no, because I feel like everything related to crypto is happening in New York recently.
Yeah.
So obviously, I thought that DAS would be massive, but I definitely think the energy is a little bit different here.
Yeah, I mean, one thing that I've noticed for sure is in the past couple of years, New York has become the epicenter for crypto. And I think especially after the Trump administration kind of became more crypto friendly, a lot more people have started being based in New York City. And there's just been a lot more stuff happening there, such as more and more conferences being based there as well.
Yeah, no, absolutely. And before we kind of get into what you're building at Sei and what's actually happening with Sei right now, I'd love to get a little bit of an introduction from you on how you actually got into crypto, how you got started with Sei. What was kind of like the origin story for you?
Yeah, for sure. So my background is I grew up in the Bay Area. I studied CS in college, and then my first job straight out of college was at Robinhood. So Robinhood is the brokerage in the United States, and I interviewed there back in 2017 when it was basically just like two buildings across the street from one another in Palo Alto. And I was there for a ton of stuff over there. And most notably, I was there when the GameStop saga happened. So the GameStop saga, without going too deep in the weeds over there, there were a bunch of stocks that were taking off. It was primarily retail that was buying these stocks. And then one day, just out of the blue, Robinhood turned off buys on them. And as you can imagine, like the entire country was very upset about that. And Robinhood did a very poor job of explaining what was actually happening behind the scenes. And like the root cause for this was T+2 settlement. It takes, back then at least, it used to take 2 days for trades to settle in the United States. And because of this, Robinhood basically needed to put up $3 billion of money as collateral with counterparties. And that's just insane, right? Like who just has like $3 billion lying around? So that was kind of the root cause for this. And then Robinhood just communicated it really, really poorly. But that kind of highlighted how the traditional financial system is using a bunch of these legacy rails that don't make sense in the era of the internet. Like now everything should be instant. It should be happening much more quickly than it is happening in the current traditional financial system. So that was the initial inspiration for Sei. We thought that having something like Robinhood, except building it on chain, there was an opportunity over there. So we got started with that. Initially, we were going to build an app. We realized that there's no blockchain, at least back in 2021, early 22, where you could build an order book based exchange while on chain. That led to us building our own chain, and then the rest of it led to your Sei side.
I actually worked at Say, so I was at Say in 2022, and we were obviously in a very, very different position back then. And I actually remember one of the first was go through all the podcasts that you had done to see which parts we can clip out and post on social media.
That's yeah, really. But yeah, and then from there you founded Say. What was that like? Because it was also in the middle of a bear market.
Yeah. So the entire journey with Sei, I feel like bear markets have been extremely important for the way that the project has turned out. Because like we've been through a couple of things that could be classified as bear markets at this point. When we initially got started, like fundraising, for example, that was right after Terra blew up.
Wow.
So this was May of 2022, and we decided like, oh, let's go out and raise money, which in hindsight was a pretty bad idea. And a lot of investors at the time, they were kind of just like waiting to see how things played out. And what this ended up meaning in practice was that a lot of investors did not want to invest money. So we ended up getting pretty lucky with the way that our round came together, but it was definitely not granted. It was not a given that that would kind of work out that way. So yeah, the bear market was definitely difficult from that standpoint. Then for our second round as well, we basically initially started raising right after FTX collapsed. So as you can imagine, that was also a pretty bad time to raise in November, December of 2022. So yeah, I mean, the nice thing about building in the bear market though is that there's a lot less distractions and you end up having to be much more frugal and focused. From the frugal standpoint, you're obviously spending less money because you raised less money. From the focus standpoint, like you can only take a small number of bets when you don't have that much money to be spending. And then that allows you to really build towards one thing. And then there's no other distractions to change the direction that you're going in. So I think right now we definitely are in a bear market. Undoubtedly the vibe from Cannes and every other conference I've been to this year. And if you know what direction you want to go in, it's actually quite good because you can just be heads down, build towards that direction. And then 6 months from now, 12 months from now, when the bull market starts again, it's very easy to get a lot more traction because of that.
Yeah, no, I can totally imagine. It must have been so hard, especially to like fundraise in a bear market. And obviously coming out of that bear market and now getting to where you guys are, which is obviously one of the largest protocols. How has the vision changed for you? When you when you first started Say, what was the vision like? And from there, how has it evolved? And what has it turned into now for you?
One of probably the core thesis that we had back then has not changed, which is that trading is the core use case for crypto. That has continued being the case. And like back then, it was kind of clear to us. And I think that the way things have played out, it's become even more apparent now. Like if you look at the things that are generating money in crypto right now, there is one thing that is generating most of the money in crypto, and that is trading. Like all of the applications that are doing well, most of them are either directly or indirectly tied to trading. And even if you go to like DeFi Llama, look at the top 20 projects, there's like 15 that are tied to trading. There's 2 that are tied to stablecoins. And those ones, like they get their demand from trading as well. And then there's 3 that are tied to lending, and they also indirectly benefit from trading. So trading undoubtedly is the core use case. It'll continue being the core use case, in my opinion, as well. So the way that projects should position themselves is to figure out how they fit into trading and make sure that they're building an infrastructure project, for example. Your infrastructure needs to be optimized for the current trading activity that we're seeing and also the future trading activity that we hope to see coming on chain, especially with more institutions, more liquidity that'll all come on chain in the future as well.
Interesting. So is that something that you're optimizing for right now as well? Because I know right now a lot of people are working on tokenization of real world assets. So, when it comes to Say, what are you guys working on when it comes to
Yeah, so in the case of Say, there have been 6 real world assets that have deployed in the past year. So there's been tokenized assets, tokenized funds coming from Brevin Howard, Hamilton Lane, BlackRock, Apollo, Laser, and most recently Ondo USDY as well. So a ton of stuff happening on that side. I think every infrastructure project should be making a push to try to get more institutional funds and institutional liquidity to start coming on chain. I think the reason that we started seeing more institutional adoption is because the regulatory landscape in the US is changing, which is setting a precedent for the rest of the world as well. This is making it easier for institutions to make that bet because from their standpoint, in the worst case, it becomes kind of a marketing narrative for them that like, oh, we are becoming crypto native. We're following whatever the latest financial trends are. In the best case, it's a way for them to make billions, if not trillions of dollars in the future. So it's just a very positive bet for them to be making. So from our standpoint, we've started seeing more activity happening over here. And it's also kind of served as the inspiration for our newest protocol upgrade, which is called Sei Giga. So the inspiration for Sei Giga was after we went live on mainnet with Sei V2, which was the first parallelized EVM. We thought to ourselves, what's next? And back then, our intuition was that, okay, we need to start supporting more activity on the base layer because we still haven't been able to support something like NASDAQ on-chain yet. And that's become even more clear now with the kind of activity that we're seeing with institutions coming on. So the intuition for Giga now is we want to support something like NASDAQ and support that kind of trading volume and all of the bells and whistles that would come with that and start supporting that directly in the base layer. Because in the long term, if you think that there will be these permissionlessly tradable assets coming on chain, the way that money will be made will be via priority fees. So the way the priority fees will result in revenue is like you need that trading to happen on chain. So you need your chain to be scalable enough to handle that kind of traffic. So that's what we've been very heads down on building in the past year or so.
Super interesting. And I'm sure, now that you're working with all of these institutions as well, it's become very different for you, compared to, say, 2021, 2022, when it was more of a cypherpunk era. So how has that shift been for you internally, especially when it comes to building Sei and also the team, but most importantly, like for you internally, how has that shift been?
I think internally it's resulted in the organization needing to grow up. And I think this is true for just crypto more broadly. I think in 2022, you could be like a 22-year-old founder that just graduated from college. You could come in and it was kind of the Wild West. Like you could build something that was really significant because there wasn't as much of a edge that you needed to have to do well because the industry was so early. I think now that is much harder to accomplish. Now crypto is moving in the direction of basically every industry as it matures, which is that era when suits start to come in. And then what that means is you need to have some kind of distribution pipeline already set up to make whatever thing you're building become successful, which is why all of the new layer ones, layer twos are launching. The ones that are successful, they're going to be backed by some kind of bigger institution. Like the most clear example here would be Tempo getting backing from Paradigms, right? If you're building a stablecoin now with like the regulatory landscape that's changing, it's very easy for like a US company to launch a stablecoin in a legal and compliant way. So many of them are, which also means that this entire class of like startups that are trying to do like legal arbitrage, that are trying to launch like stablecoins that are doing X, Y, and Z, they're no longer really relevant. So I think the entire industry is going through that maturation process. And as a result of that, you do need to start having more of these distribution partners that are working with you if you want to succeed as an infrastructure project. And internally, you also need to have much more of that both buttoned up kind of perspective on how to approach things. And you also need to focus more on core performance indicators such as revenue versus something such as like narrative and like mind share and the things that used to matter back in the day.
Yeah, no, it makes sense. And then internally within the company itself, how have you kind of been creating that culture?
That culture becoming more buttoned up.
Yeah.
We've just started hiring people that are much more experienced now. Interestingly, when we got started, it was really tough to hire people that are like experienced in crypto. Because like, why would they pick this fledgling young company versus something that was already quite established? I think now we are that established company, so it's much easier to get these people that have like 5 years of experience in the industry to come and work with us. So, I mean, yeah, we've just been able to grow out our legal team, our ops team, our engineering team, our research team, and really make sure that we have the best people around the table as we set out on like the journey out of this bear market.
Oh, that's amazing. And actually, I saw you guys recently also did a rebrand. So, what was the thinking behind that?
The bear market kind of gives you a chance to go back to your first principles with approaching things and kind of figure out, like, basically do a reset and figure out what direction you want to go in. Previously, our Sei Labs branding, I would say, wasn't very well thought out. Like we kind of just like put something together for the sake of like having this online presence, but like the core work that we're doing was very much on the protocol side. Now we're realizing that we need to have some kind of brand that people are able to associate with and to kind of understand more about what we're doing. So this is very much a product and research type of organization, and that's what that brand is kind of exemplifying. And it did take a lot of inspiration from these major AI companies that are pushing the bounds for the research from the AI side, because that's exactly what we're doing from the blockchain research side. And yeah, I mean, moving forward, we will be leaning much more into that research narrative, especially as we've started growing out the research team as well. And to the previous thing we're chatting about, a bear market is definitely the best time to level up your team, because a bear market is when there's a lot of companies that are shutting down, or they're at least people are more open to leaving where they currently are at. So for a company that is well capitalized, that has at least momentum driving it forward, it's really easy compared to a bull market to get a really strong team together.
So you're actively on the lookout for people.
Yes, if you are a talented builder, definitely on Twitter.
Okay, interesting. And I know you guys have also alluded to doing some work on the agentic AI side. So what is that about and how's it going for you?
Yeah, so Sei definitely wants to be at the forefront of everything happening with agentic commerce. We've done some baseline level work, such as setting up an X402 facilitator. We're one of the first groups to work with Coinbase on that. We started looking more into the MPP side, which Stripe has recently announced as well. Broadly, the way that I'm seeing things moving forward right now is there will be agents that are doing stuff like they need to make payments, and stablecoins are the most internet native way for them to make these payments.
Yeah.
The flip side of this is that there is very much an argument that in the next 6 months, there's not enough of a use case to drive these agents to be making, to be using stable coins or using crypto rails for these payments. Because if something is a bigger transaction that needs to happen, let's say that it's an e-commerce transaction, you tell your agent to go and buy a pair of shoes for you. If you use a stable coin, it's really difficult to do any kind of dispute on that. Like if you don't get that package delivered, then like what do you do?
Yeah.
So credit card rails end up being much more like a much better user experience for people. So then the second thing that would matter is something like microtransactions, because in the case of credit card rails, there's a minimum size of whatever that transaction needs to be. It could be something like 50 cents. If you're paying like, let's say 1/10 of a penny for something, then stablecoins are much better. The question then becomes like, what do you actually need these stablecoin microtransactions for? And I don't think we have a very good answer to what agents need them for quite yet. So that's why I think from more of a first principle standpoint, I want to see what is actually going to drive that agentic activity. And in terms of which chain will win that agentic activity, I think it'll be a combination of three things. The first is being extremely fast, extremely cheap, especially for microtransactions, because the cheaper your chain is, the more microtransactions can be supported over there. So from that standpoint, right now, Sei is very well positioned. The second part of that will be having all of these railing, like having all the tooling built out, making sure you have the right rails in place. Sei is at the forefront of that, so I think we are well positioned over there. And the third thing is just having the liquidity and the existing traction around that as well. So I think whichever chain ends up having all three of these is the chain that'll end up getting a lot of that agentic activity in the future.
No, it makes sense. It was actually, that was the problem that I was working on all of last year as well. A lot around agentic identity, because you also have to do like know your agent.
Yeah.
So you're trying to do like agent passwords.
Yeah, no, there's this entire space around.
Yeah.
Once you start to have this agentic activity, then something like agentic identity becomes instrumental. Like how do agents interact with each other? Who do they trust? And I think there's this entire class of startups that will then emerge. It just kind of sucks because we're so early right now that like in the next 6 months, like, and you kind of have to think about it in a 6-month time horizon. If you don't see that activity picking up in the next 6 months, then if you start building a company here, it's going to be really difficult to get that kind of traction in the near future, which will inhibit all of your future growth as well.
Yeah, for sure. Actually, that's what we were struggling with as well. So I feel like last year was anyway a little bit too early to be working on this problem. But I think at least one of the good things was we had a couple of really big companies who were also interested in solving this problem that we partnered with. So, we were working with PayPal to use PYUSD for the stablecoin settlement between the agents. So I think that was kind of what led to growth for us. But yeah, I think overall it is still a little bit early to see what's going to happen in this space. But I'm pretty excited to see, what comes out of it in the next few
Sure, yeah. I think there is an angle for agentic commerce to start taking off on chain. Yeah, it's just very early right now.
Do you have any idea like what kind of use cases would be the first ones?
For agentic commerce, I do think it'll be some kind of microtransaction-based use case. Around what type of use case that is, I don't have an answer for you. If I had that answer, then I would definitely want to be investing more of our resources to start building out the tooling to support that.
Yeah, and then coming back a little bit more to you, how has being a founder changed your life? Or how has Say kind of changed your life in terms of how you live, but also more importantly, how you think even?
It's a very deep question. I think that probably the biggest thing that I realized is I have much more autonomy than I previously thought.
Yeah.
Like when I was at Robinhood, I was kind of just like going through the motions. And when you're a founder, you can't really do that. Like when you just go through the motions and like nothing really happens. But you also realize that like you have the ability to do a lot of things and like have a much bigger impact than you previously anticipated. So I think that, yeah, that's probably one of the biggest takeaways. Like each individual person does have the ability to do more than they would naturally think. The other thing that I realized is a lot of things, like once there's momentum going your way, things happen way easier than you would expect them to happen a lot of the time.
Yeah.
So a lot of these things that seem big and scary when you're getting started, they actually don't end up being that big and scary once you get closer to hitting that milestone, because it's just like the momentum that is driving you and your team forward towards them.
Mm-hmm. And was it scary for you when you started?
Oh, for sure. Yeah. I mean, when I was at Robinhood, there was a lot of money that I was leaving on the table from like, I hadn't finished my full 4-year grant. And the last 6 months right after the IPO, those were the most lucrative months to stay there. So it was mainly a financial decision, but I do think from this broader idea of fulfillment, I do feel much more fulfilled by being a founder than I did working at Robinhood. And that was probably the biggest reason that I left, because it seemed more exciting and it seemed more fulfilling to like commit myself fully to something versus just being a kind of a cog in that Robinhood machine and not being like, at that time, I wasn't even very happy at Robinhood. So that was kind of, in hindsight, that was a fantastic decision.
Yeah. And of all the kind of milestones that you've had at Say so far, what has been the biggest for you?
The one that was the most exciting was the mainnet launch. Okay. So this was August of 2023, and the entire labs team basically just got together in south of San Francisco. We rented out an Airbnb, and then we were just getting ready with all of the logistics that go into helping launch a chain. And it was basically everything that could go wrong did go wrong as part of that. But then after it was done, like we were just all kind of celebrating over there. Nothing extravagant at all. Like we're literally in an Airbnb, we like popped a couple of bottles of champagne, but it just felt like this massive milestone for something we've been working towards for a couple of years at that point. And yeah, I definitely found that to be a fun experience.
Yeah, it sounds great. So was it very like Social Network movie-esque, where they kind of celebrate the launch, or was it like pretty toned down?
It was very toned down, but I do think that the part that was most exciting to me was like working with the team and then getting to that milestone and then kind of celebrating with the team. I think the team aspect of it made it a much bigger accomplishment for all of us.
Yeah, that makes sense. Especially, I can imagine at the time a lot of the team would be remote and things like that.
Yeah. I mean, at that time we were completely remote. There was no Say office to work from, so a lot of people just flew in and like we all got together in some cases for the first time.
Yeah.
So that was really nice as well.
Yeah, and has it also been really interesting for you to now have an office space in New York as well?
Yeah, so Say Foundation got an office space recently, and that ends up being a really good kind of like magnet to draw in the team to come and work together from. It also ends up being a really good point for a lot of other partners to come and work from as well. So whether it's investors, ecosystem partners, potential people that might be working with Say through like some infrastructure deal or something. So yeah, it ends up being a really good way to both have that, like everyone kind of get more exposure to Say. And it also helps everyone move a lot faster. Because when everyone's there in person, obviously you can just tap someone on the shoulder instead of waiting 12 hours for them to respond when they wake up in their time zone. So you can move way faster. Yeah.
Interesting.
And the last question that I have for you is, so what is something that you're excited for in 2026?
2026, from the protocol side, I'm most excited for upgrades tied to Sei Giga. So Sei Giga will be composed. I mean, that's how we get up to 5 gig gas per second, which will enable basically all of securities trading to happen on chain. There's going to be, I would say, 4 different major milestones for that we'll be announcing in the next month or so.
Okay.
But the first one or two of them will happen later this year, and that'll help improve performance quite a bit. So from the protocol side, I'm quite excited for that. And then from the more go-to-market traction side, I'm excited for a couple of projects that are launching in the ecosystem because I think that they do have the potential to be those killer applications that could drive a ton of volume into the ecosystem.
What states are they?
Oh, they're all in trading.
Oh.
I think right now, like it's become clear that trading is the core use case for crypto. So a lot of the focus that we have, a lot of it is going towards like trading focused ecosystem apps as well.
So yeah, I think those are all the questions that I had for today. Thank you so much for coming on. It was great having you.
Awesome. Thank you for having me on.
Thank you for listening to Off the Record. If you like this episode, like, subscribe, and leave a review. It helps the podcast grow. You can find more episodes wherever you get your podcasts. See you next time.